You are listening to chartingwealth.com for Friday, the 19th of January, 2018. Your 10 minutes to greatness and wealth. What do we have going on? Well, we have Chapter 7. We released it yesterday. And by popular demand, for those of you who didn't download it yesterday, we are publishing it again. It will be in your email. Please go ahead, take a listen to Chapter 7. It is about the price percent oscillator. We would love your feedback on it. Again, you have to be a subscriber in order to have the link. The link will be attached to the outgoing email. If you're not already a subscriber, please become one. It's easy to do. Just go to chartingwealth.com and sign up. You'll get the daily market reviews. You'll get our trade worksheet, daily market worksheet, weekly market worksheet, the comprehensive review and forecast, and all the other things we have to offer. I did get some notes from you guys that you were late getting your comprehensive review and forecast. We did it on, the last Friday before the Martin Luther King holiday, and some glitch somewhere in the internet didn't get it out to all of you. We've republished it at the website. We've also seen that it was resent to everyone, and of course it's been downloaded since last Friday on YouTube and up on all of our various social media. So apologies for that glitch. I don't think we've ever had that happen before. But anyway, we'll be even more diligent this next week, actually at the close of business on Friday, to make sure that it goes out timely and that it does get to everyone. Again, don't hesitate to IM us, scream and holler. We'll make sure that you don't miss that all-important comprehensive review and forecast that we do at the end of every week to prepare you for the coming week. How is this week wrapping up? Well, we still have one more trading day in this shortened week, but what do we see on the S&P 500 on the weekly chart? Down 0.16% for the day on Thursday. Derivative oscillator still gaining a little bit of momentum. Price percent oscillator still heading up away from the red signal line on the weekly chart. Looks like a decent candle. Continues to shape up for the week. Still one more day on that candle on the weekly chart. What do we see on the 2-day? The 2-day slowing down a little bit, topping out at about the same spot as it did on the prior 2-day candle. This latest 2-day candle is drawn now. It is actually finished. Yesterday when we did the broadcast, we talked about how it was only the first half of the 2-day candle. Well, the second half has been formed, and we've got it. Price movement is above the 2-day trend line and well above the weekly trend line. Derivative oscillator still, well, losing a little bit of energy. Price percent oscillator, our main indicator, going up strongly. What do we see on the 4-hour chart? Again, looks like things are trying to top out. And again, with that down movement for the day, gives more credence to that. Continue to watch the 4-hour chart. All down movements start there. Derivative oscillator gaining energy. And again, keep your eye on the prize. Those of you who jumped in way back when we had the weekly vertical crossover going up all the way back in late September have done quite well. So again, don't want to lose what you've gained, but hopefully it's not going to be some systemic crash where everything just goes to the bottom quickly. But if things do roll over at some point and start heading down, as all markets do, you want to be ready to pull the plug. So keep your eye on things, and you can always get out on the 4-hour chart and get back in when things look good again. Doesn't mean that the rally's over, but just again, continue to keep your eyes on the prize. What do we see going on the Qs, the NASDAQ 100? Well, on the weekly chart there, again, have a nice up candle pushing up a little through the Bollinger Band. Derivative oscillators gaining energy. Price percent oscillator still heading up. Remember, we had a weekly vertical crossover back on Friday the 5th. That was very recently, and things have continued to look quite nice. This week appears to be wrapping up as another up week. What's up on the 2-day chart? Price movement well above the 2-day trend line and just continues to move up nicely. Derivative oscillator gaining energy. Price percent oscillator looking quite nice. And again, up just barely 0.02% on Thursday. And again, we see the Qs continuing to gain ground. Do keep your eye on the price percent oscillator. It's going flat on us. The derivative oscillator's already been in the negative. This is, again, throughout the entire day. It has flipped over on the 4-hour chart. So again, keep your powder dry, pay attention. We jumped in again with that weekly vertical crossover on Monday, that'd be Monday the 8th, after we had the weekly vertical crossover on Friday the 5th of January, and things have run up quite nicely. If you got in somewhere around 161, 162, things hit a high of 166.20. So again, that's pretty nice in just a matter of a few days, a week and a half or two. So pretty nice, not bad. We like the magic of the weekly vertical crossover. And where's it else is it working? It's working on TLT. As we go to the weekly chart and look at bonds, remember we had the weekly vertical crossover going down on the week ending. Again on Friday, the 5th of January, had a down week the prior week, much more down movement, but it sort of retracted during the course of the week ending on the 12th. And then, of course, over the course of this last week, gone down even more. Derivative oscillator accelerating its down movement as the price percent oscillator is moving down. Price movement on both the 2-day and the weekly is below the trend line, as it ought to be in a down move. We look at the 2-day chart. We had 4 days of some backup movement. Again, never retraced up to where the movement started going down back on the 10th on our Heikin Ashi candlesticks. And the latest candlestick we have is a spinning top, means indecision, tending down. Derivative oscillator spiked down. Price percent oscillator also, well, that's what spiked down. Derivative oscillator also heading down on that 2-day chart. And again, on the 4-hour chart, what do we see? Appears to be getting ready to cross over, going down. We'll see if that occurs after a morning and an afternoon of down movement, with those prior days of upticking movement, again, never fully recovering to where that strong movement started down after the weekly vertical crossover. Like we said, price movement well below the weekly and the 2-day trend line. So again, like to see things moving in the direction of our weekly vertical crossovers, as we have seen on TLT, again, down 0.91% on Thursday. So go to our last indicator. Let's start on the last ETF. Let's start with Gld Gold. What do we see on there? Well, we have 4 strong candles of up movement. And again, still waiting for that last bit of the weekly candle for this week to be drawn. It will finish up drawing, of course, on the 19th, but it appears to be an up candle, not as strong as the prior candles, but still up. Derivative oscillator gaining energy. Price percent oscillator this week not moving up at the same strong angle it was in the prior week, but still heading up and away from the red signal line. As we look at the 2-day chart, we can see that it is flattening out considerably. The latest 2-day candle, after 4 days of prior up movement, the latest 2-day candle is a pullback, a red open box spinning top, with a lot of movement on the top wick, less movement on the bottom wick, but bottom and top wicks nonetheless. Derivative oscillators continued to lose energy since it peaked out back on Monday the 8th, even though there was considerable up movement since then. That was, of course, in the prior week. So we'll continue to keep an eye on gold, but the ever-important 4-hour chart continues to move down after we had a bit of a fake out from the 16th through the 17th, and then things crossing over the afternoon of the 17th, going down. Price on the 4-hour chart pushing through the 2-day trend line, still well above the weekly. Derivative oscillator gaining energy. Price percent oscillator headed down. And again, if you want to, again, practice that 4-hour chart, it typically works. And of course, when it doesn't work, well, you pull the plug on it. The nice thing about a 4-hour chart is it's a very quick chart and an easy one to read. And when you go to pull the plug, you can minimize your losses. If you had jumped into an uptrend, you could have jumped out rather quickly on Wednesday morning. Of course, when you're dealing with 4-hour charts, what does that mean? Well, that means you have to pay more attention to what's going on in the market rather than sitting back on the weekly, and particularly with the weekly vertical crossovers. That's where we are, folks, as we end the day on Thursday, go into Friday the 19th. Don't forget, at the end of the market on Friday, we will be producing for you the comprehensive review and forecast. That is when you fill out your weekly market worksheet. All those worksheets are available, all 3, the trade, the weekly, and the daily, are all available to our subscribers at chartingwealth.com. Easy to do. Just go there and sign up. You have questions, problems, concerns. We are answering lots of emails today. Please let us hear from you. We're happy to try to supply you with the information that you need. And again, please listen to Chapter 7 on the price percent oscillator. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.